Today I'm going to show you how it is possible to make $100 or $200 a day using this simple strategy on your small Forex account. You do not have to invest $10,000 in order to make $100 or $200 from trading. If you have a small Forex account, you can simply earn up to $200 every single day if you use this simple strategy that I am going to share in this video. I took a buy on US dollar Japanese yen pair from 15-minute time frame and I ended up making over $1,200 and I only risked $220 on this trade. So what we're gonna do, I'm gonna show you exact steps that I followed to enter into this trade that made me over $1,000. Now I have decent amount in my trading account. That is the reason I made over 1200. I risked $220 to make 1200. But if you have a small account, that's fine because this strategy is gonna make you more than $100 or easily $200 as well if you have a small account. So I call this strategy loss of momentum. We're gonna focus on this concept, loss of momentum, and I'm going to show you the steps. So we will be using two different indicators with the help of price action. The first one is volume indicator and the second is MACD. So to add these indicators, click on indicator tab, type volume and select this one. It will look something like this. Click on settings button, choose the same color for growing and falling, take this volume moving average and select area from here and change the opacity to low to make it look visible for your eyes. Now this is the settings for volume indicator. We're gonna add MACD as well, moving average convergence divergence, and after adding it we need to change the settings as well. We are not going to use the signal, we're not going to use the MACD option, and we only need to use histogram in MACD. So the first thing that we need is to find the trend of the market direction, and we can do that by identifying the break of recent support and resistance area. Now when I say a recent support and resistance area, I do not mean a small support like we have right here. We need to look at the big support and resistance area. We have this resistance right here and we have a support right here. Now if the market breaks to the downside, then we are going to be looking the sell trade opportunities only, and if the market breaks to the upside and creates a new higher high, then we are only going to be considering a buy trade opportunity. So in this example, we broke to the upside, market made a big movement and ended up creating a new higher high, which is right here. So as we have broken this resistance level and we have created a new higher high, so we're going to use this break of structured area as a reference because we need the market to come to this level to test it, make a pullback towards this area. Then we will be interested in taking the buy if we see any loss of momentum in the seller's movement. So we have understood that we need the market to come to this area, so we are going to use it as a reference. Now after when we made this higher high and sellers make a pullback, before that we need to see when we broke this resistance level and created a higher high, was the volume increased and it went higher than the moving average of the volume or not. Now in this case right here we can see when we made a big movement to the upside, volume increased a lot. It even went higher than the moving average that we are using with volumes. So that is the indication that the momentum is high for the buy side, as we are breaking the previous resistance, creating a new higher high. Volume aligns with the overall market movement, and at the same time we can definitely see at the MACD as well that we have just created a new higher high, and it seems that market at the exact moment when we broke this higher high or a resistance that we had here, which we can see from here as well, when we broke it and made a big movement to the upside, not only the volume increased but also on MACD histogram shows that we have made a new higher high. So that is the double confirmation for us that we only need to look for the buy opportunity. So now what we're gonna need, that when the market will make a pullback, which we are making from right here, we need at least two swings or two legs of the pullback. Now when I say two legs, I mean that the buyers, as they have made a higher high, from the higher high area the sellers first make to create a proper leg to the downside, and then there needs to be some sort of buyers, and then sellers must come down again with the second leg of the pullback, and at the same time they should approach the level of the resistance that we have broken previously when creating this higher high. So that will be our first leg. Here it will be our second leg. Now here you can see that we first made this leg of the pullback to the downside and buyers made a movement, and after that we made a second leg of the sellers pullback to the downside, and we have also came to that level of resistance that we broke. Now while we are making a pullback, we also need to have a look at the volume indicator, and the volume, it needs to be lower, not only lower than moving average of the volume, but also it needs to be lower than the volume of the recent buyers movement that created a higher high. So we can see definitely sellers volume is not strong, it is very low, so we have less momentum in the sellers pullback. And when we came to that level of the resistance that we broke from here, we need a rejection. And when there is a rejection, we're gonna need a divergence as well, which will be a confirmation that market is gonna continue its trend to the upside. So here the sellers first got a rejection from here, then they got a rejection from here. Now when we are getting a rejection right at this area, there is something that histogram of the MACD indicator also telling us. We can see that market, it is making a movement to the downside, right? We are making a movement as a pullback, but on the histogram of the MACD, we are not going to the down, instead we are making higher lows. So that means these lower lows that we see in the pullback, as not only they have no volume, but also the MACD is telling us that there is a divergence. So that means a reversal is gonna happen. Market will just make some rejections here and then it will start to continue its movement to the upside after we get a reversal. Now this is a double confirmation for us that pullback has no volume in it. And the moment when after this second rejection at this resistance area that we broke, the moment after this second rejection, look at the increase in the volume. Volume again started to go up. It went higher than moving average at the same time when buyers are making a strong movement to the upside. So that is the indication that we're gonna go to the upside. But obviously we are not gonna take the trade from here, place our stops here and our target here. It will be only a 1-to-1 risk to reward ratio trade. So we should never be targeting 1-to-1 risk to reward ratio. Let's just say if you have a small account, let's consider you have $800 in your account. So you need to follow a good risk management so you will not blow up your $800 account. And you also need to have a very good broker which gives you a good spread, because sometimes you need to have a very tight stop loss. If you are gonna grow your small account into a big account, you need to have a good stop loss. That is why I always recommend using Vantage Markets as a broker. I have my personal account with Vantage Markets. If you want to use that, you can check out from the link in description. So if you have a small account, you're gonna need a good risk management. So what is a good risk management on such small account? My recommendation is that never risk more than 3% on a single trade. So if you are gonna risk 3% of a $800 account, that will be $24 risk. So for us to make at least $100 a day, we need at least 4 risk to reward ratio trade. So that is the reason why I always wait for the market to give me a high risk to reward ratio trade, because if I'm gonna risk $25 on a trade, then my target needs to be at least $100 from that trade. So to do that, we always need to buy low and sell high. So we're never gonna take the trade from this level because the market is too high. So we are just gonna wait until the market, after making this buyer's movement, as we are having a sellers, so we're gonna wait until the market come to that resistance area again and starts getting rejected. So as we came right at here, look at how the volume is now decreasing. There is no volume at all. The bars are even lower than the moving average of the volume when the sellers are coming again towards that resistance that we broke. So we're gonna place our trade anywhere at this area, put our stop loss just at the low of these double rejections, double bottom that we have, and our target at the high area is going to be a good trade opportunity. And here we can see that it made us more than 6.3 rewards from this single trade. So if you risked $24, let's just say if you risked $30 on this trade, that means you have made over $180 from one trade. You risked only $30 on this trade, and that is, I always recommend you to target a high risk to reward ratio trade, because that can help you turn your small account into a big account very quickly and in a very efficient way. So it's really possible to make $100 or $200 a day if you have less than $1,000 account. And my recommendation is that if you're going to open up an account, then use my recommended broker. I have added the link in description. They give you good spreads and good commission structure. So let me know in the comment section if you guys have any question, and if you got value out of this video, then make sure that you like this video, hit the subscribe button and turn on the notification bell as well. I will see you in the next video. If you want me to make any video of your favorite topic, let me know in the comment section as well. I will see you in the next video. Bye for now. Peace out.